Hello, everybody. Welcome yet again to another edition of 18 Minutes with 180 Markets. I know we are coming out to you these days with a lot of interviews and a lot of information, but as they say, you have to strike while the iron is hot. And speaking of hot, in a small cap world, not many companies right now are hotter than Mount Burgess Mining. And we are lucky enough to have with us today their managing director, Nigel Forrester, who is joining us. And the reason that he is joining us is they have had some incredible news over the last month that he's going to discuss. And he's doing a capital raise, which I'm proud to say that 180 Markets is leading on the back of this news. And we're going to do some more drilling and discovery work down the line. With that introduction, enough with me. Nigel Forrester, Mount Burgess Mining, welcome to 18 Minutes with 180 Markets.
Good morning to you all. How are you all? To give you a bit of background and history of myself and Mount Burgess Mining, I'm actually a chartered accountant. I'm a member of the Institute of England and Wales. But when I came to Australia, I got involved with a resource group. And in 1985, I decided to go out and do my own thing. And I put together Mount Burgess Mining and floated Mount Burgess Mining. And we were initially involved in gold exploration and gold mining here in Australia. We actually discovered the Red October gold deposit in Lake Keary. And at the time we were in joint venture with Sons of Gwalia. So I did a deal with Sons of Gwalia because at that time their book was worth about, their gold forward book was worth about $600 an ounce, and now we were having to rely on spot at about 320. So basically, instead of, without needing to hold them up, I just said to them, I said to Peter, look, if you want to buy us out, you can buy us out. So they did. They paid us out. It was a 50-50 joint venture, and they paid us out 15 million for our 50%. And then I thought we might have a look at moving to Africa at the time, which we did. So we moved to Namibia, where we started diamond exploration. And we actually found 3 kimberlites. Unfortunately, they were not diamondiferous, whilst we did find a lot of diamonds, a lot of G10 garnets that go with diamondiferous kimberlites. We actually didn't find the source of these, but it was during this time that we realized in our diamond ground there was a portion of a Neoproterozoic belt that spanned the border between Namibia and Botswana. So basically what we did is that we then went onto the Botswana side to pick up that portion that was in Botswana. We did a lot of work on the Neoproterozoic belt in Namibia, but we never really came up with anything other than what we got out of our geochemical soil sampling. When we drilled, we really didn't get any decent grades out of it. But on the Botswana side, it was fruitful. And they say that national boundaries don't form geological boundaries, but in this case, it's quite extraordinary because all the fold closures in this Neoproterozoic belt are on the Botswana side. And it's because of these fold closures that you get this concentration of mineralization. So basically, we've been developing the Kihabi and Mu deposits since about 2005. And we've now got to a stage where we are very close to getting certainly the new deposit into production. What we've still got to do there is that we've got to do about another 2,600 meters of drilling, and then we can get that into a JORC code compliant with the 2012 code. And from there, we can go on to a pre-feasibility study, then followed by a feasibility study. What we have to do in between time is determine exactly what our power requirements are going to be, because there have been some problems with the power grid in Botswana. So we need to know that if we can't rely on that, then we need to be able to rely on solar hybrid. So we're doing test work at this point in time. The end of last year, we did some test work with Steinert in here in Australia, they have this sensor sort of process. It's an X-ray process, which they use after crushing the ore. And what we found with that was that after crushing, this X-ray process of theirs actually can reject 45% of what has been crushed as insignificantly mineralized. So that means we only now need to mill 55% and downstream treat the remaining 55%. So that's going to have a significant saving on power, because milling is what consumes the most amount of power.
Right.
We now have to do bulk test work with Steiner, so that's what we're getting prepared for right now. And then also we have to do a bulk test work with EDS in South Africa for their vertical milling process. They believe that because our new deposit ore is so oxidized, and because the Steiner initial test work worked so well, that it should work very well for the EDS vertical mill. And the reason for that is because it's so soft. And if it does work effectively with their mill, then their mill only requires about 25% of the power that a normal standard ball or rod or sag mill requires. So again, we could have a significant saving on power. Our original estimate was probably around about 20 megawatts. But if both of these processes work, then we'll probably only need between 12 and 15 megawatts of power. So that's going to make a significant saving on power. And then if we have to then rely on solar hybrid, we know exactly where we stand.
Right.
What is interesting about the new deposit, which is what we intend to develop first, it is totally oxidized and very shallow basin-shaped deposit. And
what would you be hoping to find, I suppose, because clearly the market likes what it's seen over the last 30 days. And maybe if you could just touch on what has been, for those viewers that don't necessarily know, what has transpired here.
I think what set it off was that we did a further assessment of the new deposit, and we showed it so that you could see all of the drilling that had been done basically in one picture.
Right.
And it was that everybody began to realize what the potential of the continuation of the mineralization was.
Exactly.
Set it all off. And so that's basically, I think that's what started it all. And that shows you that it's got good continuous mineralization. It's very shallow. Of all the holes that we've drilled into it to date, on average, of all of those holes, the average depth to the base of mineralization is 44 meters.
And for those of people that don't understand how shallow 44 meters is, can you just give people some, I guess, some comparisons, if you will?
Well, it's open cast, and with a lot of these sorts of deposits, then you'll sometimes you don't even hit mineralization until probably 120 meters.
Right, and I think that's an important distinction for the audience to understand, that this is really this could be enormous.
Yeah.
And very low cost because it is open like that.
Yeah. The other thing that we've got to do is that at this present moment in time, the metals that we have taken into account in our resource estimates on the new deposit is just zinc and lead.
Right. It doesn't include the copper at all, does it?
No. Well, I'll get onto that in a minute. Okay. But now, vanadium is going to have a significant contribution to the project. And what we know about vanadium is that because it's oxidized, the oxide vanadate that we've got is desclazite. And it's very easy to recover desclazite from on site. All you've got to do is first of all a gravity separation, and then after that you then do flotation using hydroxide for recovery. So we now know that we can recover zinc on site through solvent extraction and electrowinning. We know we can produce vanadium pentoxide on site. On the lead side, we will be able to produce lead on site through the use of methane sulfonic acid, where a project there in Australia, Western Australia is doing it. The one thing that we're still waiting for is to determine the mineral for germanium. We have germanium, and as I said earlier, germanium is currently trading at around about just under $2,000 a kilo. And if we can get the germanium out, it's going to be another significant contributor to the project. You mentioned copper earlier.
Yeah.
The copper is actually in the Kihabi deposit, which is 7 kilometers to the west. We've previously done resource estimates on the Kihabi resource, and again, it only includes zinc, lead, and silver. We've never included copper, but simply because of obviously the recent increase in the copper price, we started to investigate what contribution there could be. There is a significant zone of copper over about a 600-meter strike length in Kihabi, and we need to look at that. It hasn't had a lot of drilling done to it in that section, so if we could do some more closer space drilling, I think that we could significantly increase that copper zone. And it's the same with the silver announcement that we put out in August as well. That zone needs further drilling because I think the contribution from silver is going to be significantly higher than what we've already taken into account.
Yeah, absolutely. I mean, we couldn't agree more. And what would you hope to see, I suppose, over the next 6 months for the business? Because this is really, as I've alluded to earlier in the introduction, investors are very excited right now.
Sorry, did you say what have we got to do over the next 6 months?
What would be ideally investors should look for over the next 6 months in your mind?
Well, basically, once we do this test work on the power side of things, then we need to get stuck into the new deposit and get that into a 2012 JORC compliant resource. And once we're there, then we can then go and get into a pre-feasibility study. So that's what we've got to concentrate for now. Yeah,
absolutely. And I'd say that when you look at your project and your assets, obviously we always do comparisons, even though people say not to do so. If your project was hypothetically in WA, what do you think the value of it would be already?
4 times.
Easily, right?
Yeah, I mean, this is a problem, because we have projects in Africa, because our projects are in Africa, even by the fact that it's in Botswana, which is, meant to be the gem of Africa. It is quite difficult to get the understanding from Australians. It's not the same as London, for instance. It's London, it's an old colonial empire, and everybody that knows what these things are all about. So it is quite difficult convincing somebody. If I had the choice of this project being in Australia or being in Botswana, the Australian one would be way ahead. There's no doubt about it.
Right, and it just shows you the value gap, but it also shows you the opportunity at hand, I suppose. And also, you've been at this a long time, which means that you're not stopping anytime soon, are you?
No, because this is going to work. The project's going to work.
Friends, you're hearing it here.
If you go to our presentation, just go to the presentation that we did to the African Mining Summit, which is on our website. It's the last thing on our website.
And friends, just to interrupt, that presentation is only a couple of weeks old, I think. Maybe not even that far old.
No, so we only put it up yesterday.
Okay, even better.
But if you go to that presentation and if you go to a map there which shows the depth to base of mineralization, there's a little table in there. And if you look at that little table at the bottom right-hand corner, you will see, I haven't got it on me, so I hope the figures I'm giving you are right, but on average, the total length of all of the holes that we've drilled to date, 57% of the drill hole lengths contain recoverable mineralization.
Friends, that's unbelievable for those of you that don't know.
I'm not allowed to quote stripping ratios or anything like that at this time, but just look at that table and you can work out potentially what, how this is going to be a very, very easy, low risk operation.
Yeah, and also I suppose, going back to, you said you're an accountant by trade, and accountants tend to be very conservative. So there's probably a bit of conservatism even in your forecast per se. Can't let those old habits die hard. Nigel, in closing, we think it's obviously an incredibly exciting time for the business. It almost feels like that you're a 10-year overnight success, if you will. Do you have any closing comments for the audience?
All I can say is that we're not going to give up on this. This is going to work. It's as simple as that. It's all there is to it. It will work.
Well, this hasn't happened in 18 minutes before, but I'm going to cut in because you've got me pretty excited. Nigel, I'm going to ask a question, and this is going to be on a lot of people's mind. So we're currently going to place the current available amount of shares that we can, which is 52 million. And that's going to give you $400,000.
Yep.
People are going to ask us, with that 400,000, that's not going to last long. When are you going to raise again? And why should I be buying now and not when you raise again? Let's because a lot of our investors are going to think like that. Let's go through that.
Yeah, well, the issue is that, we've got this opportunity of raising this money now, and mainly that will go to doing that test work which I've explained to you, which we need to work out what our power requirement is. We will need to raise some more money to do the drilling, to get it into the 2012 JORC code. We will. It's as simple as that. We're not lying to anybody.
How can we tell investors that they're buying in now, and do you think the next raise will be at a higher price, and why will it be?
Well, if we can continue to give the sorts of results which I anticipate we will get from this test work, I believe it should be positive. It should be positive because it's going to decrease our power requirements significantly, which means that we can. It's not going to be anything like as expensive to run this project as it could have been.
Great. All right.
And I suppose that, in closing that off, is that the reason to invest now is because the next raise may be at a much higher price.
Hopefully.
Anyway, that's what made you on 18 minutes with 180.
Sorry.
Thanks, Nigel.
All right. Okay.
Nigel, we look forward to joining you on the journey. Thank you very much. Obviously, stay in close contact with us.
All right. Well, thank you for all your support and your confidence. Look, this project will work. We are not giving up.
Let's close with that. Thank you.
Okay.